What's up? It's Luke, and Strategy is on fire today, and I want to take a deep dive into their newest product, STRD.
Nothing gonna break my stride. Nobody gonna slow me down. Oh no, I got to keep on moving. Ain't nothing gonna break my stride. I'm running and I won't touch ground. Oh no, I got to keep on moving.
So STRD is their newest perpetual preferred stock, senior only to the common stock, but junior to everything else, Strike, Strife, and their bonds. It'll start at $100, and they want to start off by issuing 2.5 million shares. So they'll be able to raise $250 million to buy Bitcoin. This product has a dividend, a non-cumulative dividend at 10% paid quarterly, but there is no security for if they miss a payment. So this is a higher risk product, but it is the highest yield product. So let's get into the differences between Strike, Strife, and STRD. It's getting a bit confusing. We have Strike with an 8% cumulative dividend with an optional conversion to the common stock. We have Strife with a 10% cumulative dividend that compounds if unpaid. So every quarter that they miss a payment, it goes up a single percent to a maximum of 18%. This is more secure than STRD, which is 10% non-cumulative dividend, and they don't have to pay it. So STRD is their most risky, most yield-bearing product. And there is definitely appetite for products like that. Dylan LeClaire lays this out perfectly, saying that STRD is Strife without all of the protections in place. Non-cumulative, non-mandatory dividends, junior to Strife. Strife is their investment-grade asset. STRD is their junk grade. Saylor wants to take over the entire fixed income market, and this is just another key product. The best part, Dylan says, is that STRD issuance improves the credit quality of Strife. We'll get to that in a minute. I want to go through some of the slides that they shared yesterday. So this is their most updated 4242 capital raising plan. They're 36% complete. As you can see, they're 56% done with the ATM, and they're only 16% done with their fixed income, and it is very clear where they are headed. We have their straddle on the market here. We have the spot Bitcoin ETFs, strategy, and other levered plays are above that. And then below that are their bonds, BMAX, which is a bond ETF. And then below that is Strike, STRD, and Strife. These are low volatility, low gain. And then above Bitcoin is obviously high volatility, higher performance. All of this is built on their reserves of 580,000 Bitcoin. I think this is important to keep showing their most updated straddle. But this is the key chart. This is their new capital structure with the converts on top. Below that is their crown jewel Strife. Below that is Strike. And now below Strike and Strife is obviously their newest product, STRD. This is their high yield product. All of this is above the common stock, and obviously all of this is above their Bitcoin holdings. And I think this slide shows what they intend to use STRD for. By using STRD, they can improve the credit rating of Strife and Strike. This is clearly important to strategy. They spent an hour talking about it during their most recent earnings call, and they see the value in having their products rated. So by using STRD, which they say is junk quality, it'll show strength in their more senior products. But they can also issue STRD to add intelligent leverage onto the common stock. This is something that Saylor has been addressing. There's been a lot of MNAV FUD. As of recently, it's trading at around 1.6 MNAV. But Saylor said at the conference that they can issue $1 billion of preferreds and use the proceeds to, instead of buying Bitcoin, actually buy back the common stock. And he said that they could raise the MNAV back up to 2, 3, 4, or even 5. So this is now completely destroying the MNAV bears and actually providing hope and basically check raising the entire market. This slide shows the other market comparisons to STRD. As you can see, there's honestly nothing even in real competition with STRD. All of these yields are less than their 10%, ranging from 6 to 8 at the highest. And all of these products actually have a fee. STRD has no fees. So there is definitely going to be demand from asset managers that want to look into fixed income products that are outperforming everything else that is currently offered. Saylor just wants to take a bite out of this market. But I think the most important thing and the most applicable thing to us is that Saylor looks like he's ready to phase out the common ATM. I'm sure a lot of people are delighted to hear that. And I agree with BitPain here. I think that is the phase 2 plan. Let's get into that. This is their quadruple strategy to generate Bitcoin torque. And as you can see, we have 4 gears here. Each of these represents an ATM. You can best believe that STRD will eventually have an ATM once they're done issuing the first batch. And as you can see, the least accretive or least torque product is obviously the ATM on the common stock. So there's great reason why they would want to phase that out. But as you can see, Strike, Strife, and STRD have great amounts of torque. The reason that these products are so accretive is because when you issue Strife, no matter if the price is $100 at par or if it trades up to $1,000, they are still only eligible for that 10% dividend paid at par forever. So as long as they have the money at $100, they'll have the money at $1,000, and everything trading above par is actually giving them more and more money to buy Bitcoin. So they want to use the ATM on Strife as much as possible, and very similar to STRD and Strike. The more that they can issue those products over the common stock, the better, the more accretive. So this is their plan. Saylor said it is their plan to ultimately have one of these 4 ATMs running every single minute that market is opened. And if they can eventually fully phase out the common stock ATM and only use that to pay dividends, I'll get to that in a minute, this would be great. They basically have a fully functioning engine that they can tune however the market desires. If Strife is hot, they can turn that on higher. If STRD is hot, they can turn that on higher. But no matter what, they will have one of these 4 ATMs constantly going like a hyper efficient engine. Now, the final FUD that Saylor cleared up that I've been seeing a lot is that how are they going to pay for these dividends? And they laid it out quite simply. With their current issuance of Strife, Strike, and STRD, their annual fixed obligations are only $235 million. But in 2025 alone, the common stock ATM has raised $9.1 billion. This means that with the ATM, they only need to use less than 1% of that to cover these fixed obligations. So there's plenty of room for them to actually dial back the ATM, and there's plenty of room for them to increase the issuance of their products. As long as they can cover these fixed obligations, they could literally turn off the common stock ATM, and then on the last week of trading before these are due, turn it on for 1 day and have enough money to pay off these. So this is not a risk at all. They don't view this as a risk at all. So if you are starting to understand their strategy going forward, it is hopefully sounding good to you. They are trying to move off from converts. I think that's clear, but hopefully their demand for all 3 of these products can pick up. That would be super bullish. And if you want to stay up to date with news about Bitcoin and Bitcoin treasury companies, I just ask that you subscribe.